Welcome all to the node. I am Mike, aka Veteran Crypto, and I would like to welcome you all to our show today. We are going to have an interview. If you aren't already aware, we have Gustav, who's going to be joining us from Zenith Network. So Zenith is a project that is built on the Canton Network and has some really exciting things that it's bringing to the table, for the Canton Network and connecting the Ethereum mainnet with Canton Network as far as the EVM. So here shortly, David will be joining us. He will be conducting the interview in the second half of the show. First half of the show, as always, we're just going to go over the news. There he is, and we're just going to be we'll make sure that we spend about an hour, kind of going over what Zenith is doing and what they're up to, and hopefully kind of get a better idea of what that project is all about. So how's it going, David? How you doing this morning?
I'm doing great, Mike. I'm doing really good, man. I've been working on the newsletter. I think that's pretty close. I just got to get it updating every day on the website. But other than that, man, I think it's just about there. I've been working on my my app GetRunway.trade. Dude, it's looking pretty good, man. Pretty good. It's almost there. And let's see, just getting ready for the interview, really, just taking a look at Zenith and, doing a little bit more research into Zenith, really like this morning and how to use it. And so it looks like it's going to launch on mainnet in Q4. So maybe in like just a couple of months, it launches on mainnet, it looks like. And when I was performing some deep dive research earlier this morning, it looks like, just based on what I can see from the test net, it looks like they've got maybe, I want to find out if this is real or not. It looks like the native currency is Zen. So if the native currency is ZEN, does that mean that there's a token or a coin for this Zenith? It's basically Zenith seems to me like it is a protocol that allows you to. It's almost like a virtual machine, a virtual machine for EVM for Solidity or SVM for Rust, and maybe even for the Move programming language too, which should allow developers in the Ethereum or Solana or Sui or Aptos ecosystems to build directly on top of Canton validators through Zenith. So I think that there could be a token associated with Zenith, and I think it could be called ZEN, but I'm not sure. That's just based on what my research told me this morning. So, dude, I can't wait. I'm really looking forward to the conversation with Gustav today. It's going to be great, and going to learn a lot.
No, absolutely. And kind of the reason that I'm so excited about, Zenith and other projects that are being built on Canton is, and this is something that we talk about in great depth, here on the channel. And, I catch a lot of heat on X, debating people is, the key thing to understand about Canton is that there is a direct correlation between, in the tokenomics, as far as value capture, as far as the adoption and real use and movement of value on the network and information on the network. And Zenith, if we use if and things like that quite a bit here, because if we're honest with ourselves, this market is still highly speculative. There's a lot of unknown still. How Canton's tokenomics are going to play out once it reaches equilibrium and once the burn outpaces the mint, the effect that's going to have on the token price. There's a lot of unknowns, and we need to understand that as we invest and as we learn about these projects, and we have to stay fluid because this ecosystem evolves quickly. A token that we're talking about, like say Ondo or Kita, that I've been, kind of beating up on lately, trying to get people to understand the tokenomics, it can change. There has been rumors that Ondo is going to, have a vote later this year, and potentially that, the Ondo finance, is going to vote to make it more of a utility token to improve the tokenomics for token holders.
So hold on a second, Mike. Hold on. Do you really think that the guys in the Cayman Islands who are like reaping the rewards from this Ondo protocol, you think they're going to vote to direct revenues away from themselves?
I do not. But
there's no way. There's no way.
My point is that I don't at all. But my point is that if by some stretch that shit happened, then yes, that changes everything. Then we need to reassess. But you as an investor need to understand the risk you're taking. Investing in Ondo because of the bullish things that they're doing, or investing in XRP or XLM or Kita or Canton.
Away, XRP and XLM, get away.
You need to understand what you're investing in and the current state, not what it might be, not what it could be, not And if you understand that and you understand the risks involved with that, do what you want. We're not here to tell you how to invest. We're here to educate you. We are not influencers. We are educators. And we're not going to always get it right. And I've been going back and forth with people on X, trying to tell us that we're wrong about our deep dive on Kita and other projects. I will go out and I will actually cite my sources. I will give them links to, and screenshots of the actual documentation from the team saying exactly what it is that we put out. And
you see who's in the chat, Mike? You mentioned the token that will not be named.
Right.
And look at who appeared.
Joseph Pop. So no, it's important that we understand, how early we are in this tech and what we're investing in. So with that, if you would like, if you could pop on over here and you're interested, pop on over here and follow us at the Node Network, all one word. You can join the chat with Joseph and the rest of the crew, and and comment. And we read the comments, and even the ones that are trying to call us out, saying that we don't know what we're talking about, or if you want to tell us how we're wrong.
But those are the best ones, because those are the people who I would really love the opportunity to bring them on the show for 20 minutes, whoever it is, and let's have a conversation, man. I think that would be the best way to. We want to seek truth. That's what we're looking for.
Yeah.
So, you bring your evidence, I'll bring mine, and we can have a chat, Let's see what's going on.
No, it's good to have healthy debate and discourse. I mean, that's how you learn, is to get pushed outside your comfort zone, to have your thought processes and your thesis challenged. And then, and having to back it up, and you might end up being right, and it helps, but it gives you a more comprehensive understanding of the topics. So it's important to always seek out opposing views. I can't stress that enough.
So what's going on in news?
Speaking of XRP,
no, you can't do it, Mike. We can't be talking about that one.
We're going to talk about Ripple. I mean, there's almost no connection between XRP and Ripple if you understand tokenomics, but Ripple and Flutterwave. Ripple has invested in Flutterwave's Series E round at a $3.2 billion valuation, with a clear focus on backing the integration of RLUSD, Ripple stablecoin, for cross-border payments. This is what we keep talking about with XRP. The whole thesis of a high-value XRP was that XRP was going to need to be used to move value on the XRPL. Since the launch of RLUSD, there's very little need for XRP other than a cheap gas token. So this, all of this stuff that Ripple does, people need to understand that the role, or the tokenomics, the deep tokenomics that the token plays in the underlying tech. And in the case of XRP, it has little to nothing to do with Ripple's offerings now.
So I'm reading about this right now, Mike. So Flutterwave, for anyone who doesn't know, is apparently Africa's premier financial infrastructure company. It's valued at $3 billion. Okay, so that's number one. Number two, You guys got to ask yourselves, how does Ripple Labs have money? From where? Like, what economic activity is Ripple Labs engaged in that generates revenue? The biggest one, I think, is simply the dumping of XRP tokens on retail, on unsuspecting retail who buy into this hype around whatever narrative those influencers are pushing at the time. So I see all of these investments by Ripple, and I just don't care. I think that Ripple is some type of a scam. It would not surprise me in the least, although under the Trump administration, it would surprise me. But under maybe a different administration, it would not surprise me to see guys in FBI jackets going into Ripple's headquarters, because dude, it's some type of scam. It smells fishy from a mile away. And I don't care that some judge said that it's okay to dump XRP on retail, but not on institutions. Dude, it's a fraud. I think that it's some type of fraud. And so, how do they have money to buy Flutterwave? It doesn't do anything. There's no there there.
Well, the issue that I have is that Ripple doesn't really generate any revenue. It's like most of their operations is funded by dumping the XRP token. There's 1 billion tokens that come out of escrow every month that they can choose to relock, and sometimes they do, but often they sell them. And that's how they're funding. I mean, basically, a lot of these projects, and it's not just XRP, a lot of these projects, especially the older ones with these shit tech tokenomics, they use the token as liquidity to bootstrap, their companies, and many of them are building, good tech, and they're, people are actually adopting and using their networks and stuff like that in some cases, but because of the tokenomics, the mechanics, other than basically giving your money to them to build their business, there's no connection to you holding the token and them sharing those profits later on down the road.
Yeah, I can't keep talking about XRP, bro. It just pisses me off.
No. Yeah, unfortunately, it's we got to report all the news, even
that news sucks. Let's talk about something else.
All right. BlackRock's new ETF. It looks like BlackRock has launched a new Bitcoin ETF that utilizes a covered call strategy to generate income, signaling continued institutional focus on yield-generating crypto projects. So this is something that we can definitely dive into, because I know that you like this kind of stuff.
Yeah. So Mr. Saylor has some real competition now. And I was taking a look at this one, Mike. So there's this new Bitcoin. It's this BlackRock Bitcoin Premium Income ETF. I think, Mike, that it may have actually launched right now. I think it may have launched today. So if, House Flips is talking about I like yield, well, the yield that they're, talking about for this BITA product, I think is between they're targeting between 15 and 25%, while also giving you exposure to up to 70% of Bitcoin's upside. So this is pretty interesting. How exactly is the yield generated? Well, I don't think that it's generated in the same way that Mr. Saylor's product generates yield. I believe that this is, like you said, Mike, just a covered call strategy. So pretty straightforward. The way that a covered call works is you own the underlying and you sell either at the money or out of the money calls against that underlying asset, usually stock. So in this case, I think it would be spot Bitcoin. So that means that they're probably selling futures options or something like that against their underlying holdings of spot Bitcoin. So they're selling out of the money premium. They collect that premium. That becomes the yield. It gives them, they can basically hedge a small amount of downside, and they lose, some participation on the upside. But it looks like they've structured this thing to where they can participate in 70% of the upside on Bitcoin. So I quite like this. It's not as complex as Mr. Saylor's product, the STRC and SATA products, but it looks like if it works, it'll generate quite a bit more yield, but you're going to lose some exposure to the upside, though. So I like it. I think that the more products built on top of these digital assets, the better. So I'm looking forward to seeing the adoption for this product. To see what type of inflows we get. Looks good to me, though. I like it. What else is going on?
So yeah, well, I mean, I have a little bit to say about this. So no, it's any of these assets, especially things where I can have exposure to Bitcoin and earn yield, to me is important. It's because to be honest, I mean, again, that's what we're here for, is to be blunt about this stuff. As bullish as I am on Bitcoin, there is a serious lack of ways to earn yield with it. There's a serious lack of DeFi built on Bitcoin. We've talked about this multiple times. So, any of these products that potentially, gives us, at least partial, if not full exposure to price appreciation on Bitcoin, yet allows us to earn yield on it, to me is a win.
Yep.
So, yeah, I mean, that's my 2 cents on it.
Yeah, no, big win. Look, as much as I love Bitcoin, Bitcoin needs some type of DeFi. It really does, because that layer 1 needs transaction volume. In the absence of real transaction volume on that layer 1, as much as I love Bitcoin for its decentralization, man, like I see, uncertainty and risk there when it comes to the mining business model. So hopefully we'll see covenants on Bitcoin. There's like a BIP, I think it might be BIP 360 or something like that.
Yeah.
But covenants on the Bitcoin layer 1 means like quasi smart contracts. And so that means DeFi. And so DeFi on the Bitcoin layer 1, that means transaction volume on the layer 1. And that means fees for miners. Because, Mike, what's going to happen in 6 years when we've gone through 2 more Bitcoin halving cycles? What are the miners going to do? Are they going to be incentivized to keep their machines on or not? And it's a question to ponder.
There's a lot of people that have hypothesized about what would happen if it ceased to be profitable for people to mine Bitcoin.
Sure. I mean, yeah, man, I really, really hope that they're able to, pass the BIP in order to enable covenants, because I would love to be able to build on top of Bitcoin, because it's the only network that is truly decentralized, truly permissionless, truly sovereign. And, Ethereum seems like it's moving in that direction a little bit. But it's just not as decentralized as Bitcoin is. So I would love the opportunity to build DeFi products that are denominated in Satoshis, not dollars. That would be amazing, man. Amazing. So, and look who we got in the chat. Satoshi Nakamoto. I was informed that Mr. Michael Saylor is eager to provide half of his Bitcoin units to my fund. Oh, wow. So, Bitcoin units.
Yeah, right?
That's a great picture, though. Didn't that statue, I think that's the famous statue somewhere in Switzerland, right?
Yeah.
Didn't that statue get stolen? Didn't someone steal it?
I think so. Like
Yeah.
the head. Yeah, I don't know.
I think someone stole it, and then like either they recovered it or made a new one. But whatever. A little tidbit of trivia there. What else? What else is in the news there, Mike?
Let me check. Actually, I want to check this actual. Hold on one second.
So as you're doing that, big piece of news this week and today. So yesterday, well, not yesterday. It depends on what part of the world you're in. I'm in South Florida, so early in the morning for me, the Bank of Japan raised rates 25 basis points to 1%. So the Bank of Japan raised rates to 1%. The last time we got a rate hike from the Bank of Japan, crypto and stocks dumped. So, just keep that in mind that, that's something to watch. And also very important, Mr. Kevin Warsh, his first meeting as Fed chair started today, Tuesday, June 16th. We're going to get the presser tomorrow from Mr. Warsh. So that'll be interesting to see how he sounds. I mean, look, listening to years and years of Mr. Powell speak, listening to Jerome Powell speak there during the pressers was like, where am I? I think they were going to have to go back to the shed. He was ancient, man. Like he was not capable of speaking plainly. And, you remember the inflation is transitory nonsense, and then printing, $4 or $5 trillion in 18 months, generating this massive asset price inflation. Mr. Jerome Powell is responsible for that. So I'm really curious to see how Kevin Warsh is going to take over here as new Fed chair. So what we got going on here?
So it looks like Coinbase is supposedly launching tokenized U.S. stocks backed one-to-one with holders able to receive dividends. So in short, a short post on social media, Coinbase said it would launch the first real one-to-one backed tokenized stocks of U.S. companies. Investors will be able to trade the tokenized shares or hold them and collect dividends. Coinbase says users will be able to buy, trade, and hold tokenized versions of U.S. stocks that are backed one-to-one, the exchange announced on Tuesday in a brief social media post. The first real one-to-one backed tokenized stocks are coming, Coinbase said. Own actual shares of U.S. companies, trade, hold, and redeem all on-chain. Automatically receive dividends. No derivatives, no IOUs.
Okay, so here, Mike, can you pause there for a second? It says no derivatives, no IOUs.
Yeah.
But if it's one-for-one backed, that is a derivative. That's the definition of a derivative.
Agreed.
These are definitely, so what I'm looking for when it comes to these tokenized equities is I'm looking for on-chain origination. And I bet you that's going to start to happen on Canton. I bet you that's where it's going to start first. So
a lot of, and I don't like to hyper focus on any one project, but it's really hard for me not to with Canton. Just the way that they launched their, the token generation event, the professionalism of their company. I mean, you never hear for 10 years they built and nobody talked about them. They were just like a ghost. And then all of a sudden they had, $400 billion worth of TVL in repos, and they just popped up on RWA.xyz. We were one of the first ones to start talking about them. And we found a way to get exposure to the asset before the token generation event, shared that with our community. And just, you never hear about any of their partnerships until they go live. Like, their NDAs that they sign, they freaking hold to those. Like, and they don't, and usually Canton doesn't announce. The person that launches, or the organization that launches on Canton, is the one that announces, because that's usually how NDAs work. So they are like no hype, little to no hype, and all action. And they have what I feel is great tokenomics, compared to many projects out there. So it's really hard for me to not be bullish on Canton Network and just ape into it. But that's my 2 cents. But I'm
very bullish on Canton myself, and looking forward to learning about how I can use Zenith to launch the EVM chain dApp that I've been working on natively on Canton. Really, really interested to learn about that today. That's going to be great.
No, absolutely. That's kind of, I'm going to be sitting in the background while you conduct the interview and just kind of running the sticks and talking on social media and in the chat. But I am definitely going to be listening to all the details because, again, the way Canton's tokenomics work and their burn mint mechanism, is, the more successful that Zenith is and the other, organizations that are building on the Canton Network and utilizing the rails, then the better it is potentially for token holders, because all fees that are generated, which at currently is like $2 to $3 million a day, is being burned. You use the Canton token to pay those fees. So there is a direct connection, as far as utility for the token. It's not a governance token that you use to vote. It's a token that you use to operate on the network. And if you want to be a validator or super validator.
So that part, just because the token is needed on the network does not mean number go up for the token. But the important thing here for Canton is it seems as though once that burn mint equilibrium gets reached, that the amount of economic activity, real, legitimate economic activity that's taking place on the network, that should be enough to make the value of the CC token go up. So the fact that there's real, true utility, like you need the token to operate on the network. Plus, there's real economic activity. These two things married together, that's what we're looking for.
And to run a validator or super validator, it's and it's in their documentation. That's the other great thing, is they're very transparent about the role that the token plays. In their documentation, it shows that to be a validator or super validator, you have to basically have some skin in the game. So you have to lock up Canton. Whereas like when I'm talking to people about Kita, they keep making that claim. And I've listened to some spaces where Ty, the head of Kita, has talked about that's going to be needed, or that it is needed, but nowhere in their documentation, nowhere, there's no data to support it other than claims. So it's important to really be critical of these projects, and there is no transparency in a lot of these projects. There's a lot of promises, but not a lot of follow through. So,
right. Well, that's why we do this type of deep dive research, is to figure out, what's the point of the coin? What's the point of the token? Like when we were, Mike, I know that you were busy yesterday, but when I was going through the virtuals research, virtuals protocol, so I don't think there's really a good reason for virtuals protocol to exist, to be completely honest.
Okay.
Like if we're talking about building AI agents, okay, great, that's one thing. There are primitives that have been developed that would allow anyone to launch an AI agent. But then once you say, well, the agent needs a token, and I'm going to pair that token with virtual, like in a liquidity pool, like the virtuals protocol, the entire ecosystem seems like it has been created solely for the purpose of the founders and the people who own all the DAO voting rights to extract value from people who are launching these meaningless agents on the virtuals protocol. It looks like there is no actual value there at all. And you don't need, your agent doesn't need a token. There's no, your agent, if you want an AI agent to do something for you, it does not need a token to be able to do stuff for you. So they've created this protocol where you can launch these agents, and they all need tokens, and the tokens are paired with virtual, and for what? So you've got to ask yourself, why token? You know that phrase, like when Lambo, there's another one. Why token? Why does it need a token? What for?
Well, Base. I mean, look at Base. I mean, look at everything that's going on that network, and there is no token. There's really no need for one.
And then look at the networks that have a token, Optimism, Arbitrum, for what? Why?
Honestly, I think that early on, a lot of these crypto projects, because there was no institutional adoption, not a whole lot of, investment, it was pretty much retail, and, it was gambling, really. I mean, look at the meme market, stuff like that. That's what drives a lot of the liquidity and the volume, in the crypto markets historically. It's, really, it was to generate liquidity to bootstrap, trying to build out a company.
Yeah, basically just let's dump on unsuspecting retail so that we can pay ourselves. That's basically what it is. And, I think people mistake utility and governance for value accrual. These are not the same things. Like, you can have utility for the coin or token or whatever. You can have a governance token, but those two things can be completely disconnected from any type of value accrual. So Mike, I'm taking a look here at Japan's banking giants unite behind a yen stablecoin, and I want to share something real quick. I've been waiting for an entry on this trade for months, and so check this out. With that Bank of Japan rate decision, last night my time. So let me just share this real quick. You see, I added to the stage there my trading view.
Yeah.
So just check this out real quick. So this is a weekly of USD JPY. So this is the dollar yen exchange rate, right? Sitting at 160. Now I zoomed out here to a monthly. Okay, so we've got a lot of data here. These data go back to 1970. Okay, so with rates in Japan at the highest level they've been at in, I think, 31 years, you would expect that the yen would strengthen. It is not strengthening. And so you see this level that I've marked? This is the important breakout level. And this is my target. My target's 200. So the breakout is at 162. So I want to be buying dollars and selling yen if the yen goes to 162, because just taking a look at this chart, like, you don't have to be a rocket scientist to see that, hey, we get above this horizontal that I've marked here, and then the next stop is right here, 177. And if that doesn't hold, then we're going to 200. That's the big, round, psychologically important number. So that would imply, in dollar terms, if I just go ahead and grab a measurement tool here, that would imply that the yen loses a further 20 some odd percent in US dollar terms. So that's the trade that I'm looking forward to entering.
So you're shorting the yen?
Yeah. So I want to be long the dollar, short the yen.
Yeah.
And you could actually run something kind of interesting here. So if I just make this a little bit smaller, check this out. So if I want to be, if I'm gonna be buying USD JPY, so that is USD JPY, just like that. So if I'm buying USD JPY, that means that I am long dollars, short yen. Now, what happens if I buy BTC USD, right? Then I'm long Bitcoin, short dollars. These cancel out. So I could, if I'm long dollars, short yen, long Bitcoin, short dollars, then I would essentially be creating a long Bitcoin in yen terms trade, where I'm long Bitcoin, short yen. I kind of like that, because if we just take a look at what Bitcoin in yen terms looks like, just real quick. So if we hop on over here and we go BTC, and then I go USD JPY like that, then what we're going to see is, so this is Bitcoin in yen terms. And, look, Bitcoin is still in a bear market, but my guess would be that when Bitcoin starts to enter its next bull market, probably, in Q4 of this year, we start to see like the first real green shoots for Bitcoin. Do you want to be long Bitcoin in dollar terms, or do you want to be long Bitcoin in yen terms? I kind of like being long Bitcoin in yen terms, because I think that trade will outperform being long Bitcoin in dollar terms. So this is basically.
how exactly for people like me that don't really understand this at a deep level, how what is or how what would be the difference in how you would get long Bitcoin in dollar terms and as opposed to in yen terms?
Very, very simple. All I do is if I'm, short, if I'm short $1 of yen, then I would be long $1 of Bitcoin. I would make it equal notional amounts. So if I'm trading USD JPY and I'm, long a position on hyperliquid of, whatever the notional dollar amount, let's call it $10,000. If I'm long USD JPY on Hyperliquid for 10K, then I would probably run like a cross margin account for that particular trade. So if I'm long USD JPY for 10K, then I would also be long BTC USD for 10K. And so that trade together in a cross margin account would essentially be long Bitcoin, short yen.
And so that people understand, and I know a lot of people out there do, maybe explain the difference between cross margin and what's the other one?
Isolated.
Isolated.
Yeah. So if I'm trading in an isolated margin account, and let's say that I've got two positions on. If one position really starts to show me profits and the other position starts to show me losses, the profits from one position do not offset the losses from the other position in terms of my margin usage. And so if one position, faces liquidation, then the other position that is very profitable will not stop that unprofitable position from being liquidated. Now, let's say that I'm running something that's a little bit more correlated. And maybe I'm running some type of stat arb play, and I want cross margin so that if I'm long Bitcoin and short ETH, and I run that in a cross margin account, if Bitcoin is running and ETH is moving to the upside too, well then my gains from the Bitcoin position would offset losses from the ETH position, and that would mitigate the risk that I end up getting liquidated on either. So in a cross margin account, gains from one position can offset losses from another. But also, if you have a really, really big loss in one position, it can force close all the rest of your profitable positions. And that's called automatic deleveraging. That's what happened to a lot of traders on October 10th. So you've got to understand the risk of running cross margin, but it can be extremely useful. So,
thank you. It's these nuances that I think it's important that a lot of people understand, because like myself, I'm not a trader. I'm not a chart guy. Self-admitted. So if it's something that I don't understand fully, I know that there's probably a lot of people out there that are trying to get into investing. They're trying to get into crypto. They're trying to understand, some of these DeFi advanced strategies, things like that. So, some of these nuances are the difference between being successful in these trades or being highly unsuccessful. Like you said, October 10th, even experienced traders got destroyed because of cross margin and, other things like that.
Yeah, you got to be careful. So what I'm showing on the screen right now, Mike, is, I think it might be valuable before the interview to give everyone who's watching a primer on Zenith.
Yeah.
What is
roll that beautiful bean footage.
Yeah, what is Zenith, and what does it allow developers to do?
How long is it?
I think it's 10 minutes long.
Perfect. Actually, if we run that, I told them to be here in about 10 minutes. So that'd be perfect.
Yeah, I mean, I've actually only got a handful of questions for him today. So I hope that, what Gustav is going to be able to do is, walk us through what the protocol is and what the launch is going to look like, and how we'll be able to use it in Q4 when it launches on mainnet, and whether or not I can actually build on it right now on testnet. So let's take a look at this content. This will be interesting. This is about Zenith. So a little bit of a primer.
The digital asset landscape is fragmented by an architectural mismatch. We have two very different ways of routing capital, and right now they cannot communicate securely. On one side, public blockchains offer rapid innovation. They give developers deep liquidity pools and atomic composability, allowing smart contracts to interact seamlessly across open protocols. But global financial institutions cannot use them. Public networks lack the rigid privacy safeguards and deterministic settlement guarantees required to comply with financial regulations. On the other side, we have private, permissioned distributed ledgers. Systems like the Canton Network provide the exact bank-grade, MiCA-compliant privacy these institutions need to operate legally. The trade-off is that these private networks function as fragmented, isolated silos. They suffer from poor capital efficiency and completely lack the developer velocity found on networks like Ethereum or Solana. Zenith Network operates as a native execution layer within this ecosystem. It embeds an Ethereum virtual machine directly into Canton's regulated rails, which removes the need for, and the systemic risks of, traditional lock and mint bridges. It achieves this integration by running on a highly specialized RISC-V zero-knowledge architecture. To understand how this infrastructure works, we have to look at how it builds virtual blockchains, how it achieves consensus-level atomicity, and how its burn-mint economics operate. Applying zero-knowledge proofs to connect standard smart contracts with regulated settlement networks creates the technical capability to move trillions in institutional capital. If Zenith operates inside a strict, permissioned environment, what does the deployment pipeline look like for an engineer? The pipeline requires zero modification. Developers write and deploy unmodified Solidity smart contracts using industry-standard tools like Hardhat, Foundry, and MetaMask. This visual shows the abstraction layer in action. Standard Web3 inputs flow directly into what Zenith calls a virtual blockchain, a customizable execution environment deployed as a RISC-V program. This virtual blockchain relies on a dual-role participant model. First, the participant operates a validator node, seen here connecting to the Canton Network, continuously listening to ledger transactions on their specific subnet. At the exact same time, that participant acts as the local sequencer for the virtual blockchain. As you can see, it organizes incoming EVM transactions into a sequential, single-threaded order. These ordered transactions then execute entirely within RISC-V's zero-knowledge virtual machine, known as the R0 VM. Every block produced locally generates a zero-knowledge proof, certifying the exact correctness of the execution. This proof package is then exported down to the Canton mainnet. Notice the data boundary here. The raw transaction data, the smart contract inputs, and the counterparty identities never leave the local sequencer. The only information transmitted to the wider network is the mathematical guarantee that the state transaction was executed correctly. This is a direct contrast to standard Layer 2 rollups on public networks, which are forced to publish their raw call data back to the base layer for data availability. Because of this localized execution structure, a financial institution can interact with complex DeFi applications and prove their activity is valid without ever exposing proprietary trading strategies to the open internet.
Wow, that's such a big deal, Mike. So being able to imagine this, like right now, if you want to use an EVM chain dApp, an Ethereum virtual machine chain dApp, let's say Uniswap, right? For the most part, I think that there might be some privacy on V4 hooks, maybe. Well, but if you're using Uniswap, right, and you're swapping assets, it's public. It's public.
Because it's going to change the conversation here. There's that they're voting on that, I forget which it is, but they're adding privacy to Ethereum. So
right. Yeah, well, that was a proposal.
Yeah.
So
this year they're adding that.
Right. So, but as of right now, if you are an institution and you're going to operate on an EVM chain or an SVM chain or whatever, it's public. This stuff is all public. And so if you're a hedge fund and you've spent millions of dollars to develop a proprietary trading strategy, you can't have your trades be public. Like, kind of defeats the whole purpose, Like, you spent all this time, all these resources to build your strategy. It starts working. And then what? You're just going to, publish it for the entire world to see? You can't do that. So that's why, this selective disclosure, this privacy layer is so important. And being able to, let's say that you want to use your favorite EVM chain dApps or Solana dApps, or I think even Sui dApps, although I don't know what Sui dApp you're really going to want to use. I mean, the vast majority of stuff is on Ethereum. Yeah. So let's say that you want to use your favorite Ethereum dApp, but you really want it to be private, and you want it to execute on Canton because it's connected with your prime broker. Maybe your prime broker is Goldman Sachs or JP Morgan Chase or whatever. And you can do that.
There's a bunch of other functionality that Canton offers, for running on it, as well as the compliance and all those things that are critical, to these institutions and banks, when it comes to being fully compliant with multiple regulatory bodies, around the globe. So, it's almost turnkey. A lot of these projects that are purpose built for institutions and things like that, not as an afterthought, but as purposely built. I see them as being hugely bullish, as far as their tech in general. Does that what does that mean for the token? It depends on the project, the tokenomics, the mechanics, all of those things that we always talk about. But for this, it's very bullish.
Yeah. I mean, being able to, operate on your favorite Ethereum dApps, but do so in a private, permissioned environment that is compliant natively on Canton, dude, that's some next level stuff right there. Love it.
Getting an off-chain execution environment to settle back to a private distributed ledger usually requires a third-party oracle. That introduces dangerous latency and security gaps. Zenith bypasses this by integrating directly with DAML, the native smart contract language that powers the Canton Network. Look at this diagram detailing the two parallel data streams. The left logic gate represents a proprietary DAML primitive called external_call. This function allows a DAML contract sitting on a Canton subnet to request an execution from the Zenith EVM running locally. By acting as a direct native conduit, this initial transmission allows for optimistic transaction confirmations with sub-second latency. The loop closes with the second logic gate, the verify primitive, which pulls the cryptographic proof down from the virtual blockchain and processes it on the Canton stream. The verify function ensures the mathematical integrity of the settled state root, confirming the off-chain execution perfectly matches the rules. If native cryptographic verification isn't exposed yet, the contract simply uses the external call function to relay the verified zero-knowledge results directly from the local operating environment. Relying strictly on native DAML logic gates removes the need for third-party multi-signature validators, bypassing the collateral custody risks that plague traditional bridging architecture. This direct DAML integration becomes critical when processing the most dangerous operation in decentralized finance.
Can you guess what is the most? Yes. It's always been bridging.
Yeah.
And that's why what Near built with cross-chain atomic native swaps, that's why that's such a big deal. And the same thing with this. These are atomic, meaning they either complete in full or revert. So that's super important.
Cross-chain swaps. Most multi-network applications handle these swaps using hashed time lock contracts, or HTLCs. This comparison table illustrates the operational flaws of time lock contracts. Notice the settlement speed.
Okay, so let's just take a look at this real quick. This is comparing HTLCs with Zenith consensus level swaps. And I'm sure that, in just a few minutes, we're going to get a lot more information about this. But so settlement speed. With Zenith, it's sub-second execution and finality. That is amazing. It's atomic, I think. The architectural vector, the next one, is chain reorganization risk. So with Zenith, this is completely mitigated there is no intermediate state. And the architectural vector, the last one here, is free option exploitation. So what is free option exploitation? I don't know what that is. It says here with Zenith that is mitigated execution is instantaneous because it's atomic. But these HTLCs, they're gated by the slowest chain. The reorganization risk for the chain is high. Your cross-chain swap can potentially be retroactively unwound. And I don't know what free option exploitation is, but it says that HTLCs are vulnerable to that. So yeah, I know what that means, free option exploitation. So that means sitting on a swap, waiting for a better rate in order to extract value from the entity or individual executing the swap. So with a atomic swap, there is none of that. But with an HTLC, if your bridge provider elects to sit on the transaction, waiting for market volatility to work in their favor, they can essentially exploit you during the bridge, where you get a worse fill. But because Zenith is atomic, there is no such thing as that. So,
time locks often introduce hours of latency because they are gated by the slowest chain in the swap. Moving down to chain reorganization risk, HTLC claims can be retroactively unwound if one of the probabilistic blockchains experiences a split state. Furthermore, they are highly vulnerable to free option exploitation, where the secret creator of the swap maliciously waits out market volatility before deciding whether or not to finalize the trade. Zenith circumvents all of these application layer vulnerabilities by achieving atomicity directly at the protocol layer. Through its native integration, both the Canton-based DAML transaction and the Zenith EVM smart contract execution are packaged together into a single cohesive Canton transaction view. Both legs of the trade exist within a unified consensus domain. They are processed under identical network conditions at the exact same time. The outcome of this domain is strictly binary. Both legs of the swap are committed together, or they are rejected completely. There are no intermediate states. This consensus-level atomicity makes intermediate chain reorganizations, maliciously blocked liquidity, and free option exploits mathematically impossible, providing the security guarantees required for institutional trading volume. Securing this unified consensus domain requires specific economic infrastructure and validator incentives. For institutions, Zenith delivers a major compliance victory here. Network participants do not need to hold a volatile third-party token just to pay gas fees. Instead, virtual blockchains can be deployed using the native Canton coin for all transaction fees. This graphic visualizes the burn-mint equilibrium model that aligns the token supply with network utilization. Transactions consume traffic credits, which are purchased by burning Canton coin according to a dynamic on-chain exchange rate. As network utilization has surged, daily burns have grown from 10 million to over 35 million tokens. This activity has pushed the network's burn-to-mint ratio across the deflationary boundary seen here.
Actually,
I don't think that's quite accurate, not yet anyway. I know that Gustav just entered. I want to finish this piece of content, and then because I want everyone to have a primer, right? So let's and then I'm sure that whatever hallucinations the AI may have made, we'll be able to address them in a couple of minutes here.
Coin handles the gas. The underlying zero-knowledge infrastructure relies on ZK Cloud's native proof token. Compute nodes must stake proof to generate calculations and face slashing penalties if they submit incorrect data. Governing this dual token architecture involves strict oversight. Recently, the Canton governing body passed proposal CIP0091, granting Zenith a Tier 1 super validator status. This document outlines the proposal's escrow system. To prevent governance capture from day one, Zenith's maximum consensus weight of 10 is locked behind specific milestone-based criteria. By legally tethering voting power to verifiable network activity, such as issuing $1 billion in real-world assets, Zenith ensures that its governance influence only grows as it generates actual value for the ecosystem. The Zenith Network resolves the walled garden dilemma by cleanly separating public smart contract execution standards from private institutional settlement. Look at this final visualization. It represents the target end state. A Tier 1 bank deposits tokenized collateral securely on an isolated subnet and immediately deploys that capital into an EVM-compatible lending market. Moving forward, the roadmap plans to expand beyond the EVM, integrating the Solana virtual machine and REST compatibility to support all major execution environments.
I think that may have happened. I saw some news on X that told me that maybe this happened, and we'll find out in a second.
Well, let's bring Gustav up, and
The
he can.
exclusive translation layer
We've
between
got 30
Canton's regulated
seconds.
bank consortiums and the open Web3 developer ecosystem. The immediate operational challenge is scaling the underlying zero-knowledge computation so that high-frequency trading volumes can be processed economically. By combining zero-knowledge data isolation with consensus-level atomicity, Zenith establishes the strict infrastructure required to move trillions of dollars of dormant real-world assets into highly productive on-chain financial protocols.
I love it. That's great. All righty, let's rock and roll. Here we go. Gustav.
All right. Well, Gustav, I want to thank you for taking the time and coming on the show. And if we could, let's start with a little bit about you and what you do there at Zenith, and a little bit about your background. And then I'm just going to turn it over to David, and you two can hash it out.
Yeah, I really appreciate you guys having me on. Can you hear me all right?
Yes,
sure
sir.
can.
Perfect. So I'm Gustav. I spent the last 8 years working in DeFi. I started in 2018 at MakerDAO. I was there for 3.5 years, leading the business development in Europe and Southeast Asia. Already back then, I was working quite a bit with institutions, and for example, like when SocGen, Société Générale, the big French bank, did their project with Maker. That was one of the projects that I was leading. And then after that, I had a stint at 1inch, where I was leading the institutional product. Unfortunately, the regulatory environment back then was not quite as friendly. So,
yeah, quite a bit different back then.
Yeah.
Yeah.
And then for the last 4 years, I had my own startup. It was called Stable Lab. We basically were specialized in governance, DAO governance. So we were working with all the major DeFi protocols, a lot of the big L2s, some L1s as well, building both governance products and offering governance services. We were big delegates, sat on council committees, led a variety of different initiatives. We shut that down end of last year, had 30 employees, and then I joined Zenith this year, and I'm leading ecosystem at Zenith. So basically my role there is to kind of like merge, the DeFi ecosystem that, has been developing over the last 10 years on the Ethereum side to kind of like the institutional ecosystem on Canton. So yeah, that's basically my role there. So yeah, we are, talking with a lot of the big DeFi teams. And then like the second leg of it then is that, once we have DeFi on board, we of course also want to make sure that, both the institutions and DeFi is thriving. So I'm also talking with a lot of asset issuers, both startups and institutions that, has a variety of different assets, real world assets, that we then, are, finding liquidity for, helping them solve the distribution piece, and then, potentially using DeFi rails as well. So yeah, there's a little bit about me and my role.
Oh man, that's great. So Gustav, I really want to thank you for coming on the show, and I appreciate your time today. And so I've got a handful of questions for you. And
Sure.
If you're ready to rock and roll, man, let's do it. So section 1 here, what we're going to talk about first is bridging TradFi and DeFi. So I want to give you a little bit of context before each one of these questions. So, Zenith is integrating decentralized finance with institutional capital markets. And doing that has historically been hindered by an architectural mismatch between public block space and private ledgers. So how does Zenith Network act as a reconciliation layer? And how does it allow these unmodified Solidity and Rust smart contracts to operate on its highly regulated and privacy-preserving institutional rails?
Definitely. So I think to answer that, I need to just take a little step back first.
Sure.
So basically, for the last 4 or 5 years already, all of the major DeFi protocols have basically been eyeing institutions as like their next, kind of like growth vertical, right? So you can imagine, I think at this point, I think all of us can agree, like retail is exhausted, right? There's not really like a lot of growth in like the retail segment of the market anymore. However, of course, we're seeing like institutions coming on board. So what this basically has led to is that a lot of the protocols is directly at the protocol level, offering various compliance solutions. So I think like when we look at institutions in DeFi and just institutions on the blockchain in general, I think we can also recognize that there is like a large variety of institutions. Institutions like a very broad segment, right? And I think of course, for some of the institutional use cases, living natively fully on Canton and doing what they're doing on Canton, especially for back-end settlement and things like this, is they require kind of like 100% privacy, the entire time. But there's also like a lot of other institutional use cases that don't require the same level of privacy all the time. So basically, the way that you can interact between Canton and Zenith is that, of course, on Canton, everything is private. Zenith, the initial version, will be public. So it's, like a Reth implementation. It's, what we know from like a public EVM environment. However, at the application layer, you can still have, compliance checks that is required from, the institutions to participate, basically. So it's kind of like this idea that, assets can move freely between Canton and Zenith. So, you can have all the privacy on Canton. And then, in one transaction, you can bridge to Zenith, use your asset as collateral in DeFi, take out a loan, swap to something else, and be back to Canton in the same transaction. Like those few transactions you're doing on Zenith will be public, but when you're back on Canton, you're again private. So on that level, you will still kind of like maintain the privacy of the interaction. You don't know where the interaction is coming from. So I think of course, some institutional use cases requires full privacy all the time. But we also have a big interest in institutions that says, hey, we are okay with part of our transactions being public, or even all of our capital allocations being public. I would also say another thing here is that the Zenith EVM and SVM is kind of like the first deployments that we're doing, right? But we also have plans for like a fully private Zenith environment, and also private environments in the sense that let's say you're a bank, you could have your own Zenith stack chain. Where you have much more controls than even you potentially would have on Canton. So I think it's kind of us basically recognizing that we can't necessarily play ball with everyone, but we are very happy to play balls with the ones we can.
Great. So I'm happy to hear that there is selective disclosure or privacy on the roadmap. But interesting that it's going to be, public on the EVM, side first. That's interesting. So, Zenith, it bypasses this traditional vulnerability-prone interchain bridge or interchain swaps, in favor of a native execution environment. So, can you maybe explain for our audience some of the risks of traditional bridges? I'm sure that all of us are familiar with the risks of traditional bridges, but a couple of them might be like oracle lag or collateral custody concerns. How does Zenith's integration model solve this challenge?
Right. Also, I have another point just with the question before in terms of privacy. We also have privacy solutions on Zenith that are non-native. So basically one of the options we're also exploring is that basically when you come to Zenith from Canton, you can basically opt into a privacy solution, and then you would be private on the Zenith side as well. But it's not native in that sense. So
got it.
Yeah, and then I mean it's a good point, right? And I think what we have seen on kind of like the bridging side, I think one aspect of it is that a lot of the bridges, they're kind of like one to many. So like you can go from Ethereum and you can go to 30, 40 different chains. And of course, like when you have setups like this, you also add more complexity to the equation, right? So like our bridge between Canton and Zenith is a very simple bridge. Basically, it's a two-way bridge. And of course, we've taken like a very good look at kind of like a lot of the faults that have been made in the past. So yeah, like I think like our approach is to basically keep it like very simple and then prioritize security at like the utmost level. On top of that, also like the bridge in itself is not a business case for us, really, right? So it's also not something where there's no fee or anything when you're going between Canton and Zenith. So in that way as well, we have like I think just like a little bit of like a different approach to it as well. But of course, yeah, I mean, like of course I recognize that like bridges has been accounting for, I think bridges, centralized exchange hacks, and DeFi hacks is kind of like the three main capital loss leaders in Web3, right, on the hacking side. So yeah, I think like that's basically our approach to it. So keep it like very simple. And then yeah, like the bridge itself, then we have also compliance checks, and also like ongoing monitoring of the bridge. So if there's anything that looks suspicious, whether that's like for example funds that comes from a place where it might be not good funds, like with a shady history or something, we can block that directly in the bridge. And the same, if there's like transactions that looks like this is like outside of like what like normal activity looks like, then that's also something that we can check and block.
So let me ask you this question: how do I bridge assets directly from, let's say, ETH mainnet on, maybe I hold ETH on mainnet? How would I go from ETH on mainnet to being able to operate in an EVM environment on Zenith, on Canton? How do I go? How does that work?
Right. So I mean, this is kind of like the same way that you would go between any blockchains, right? So that's basically you would use like one of the traditional bridge partners, or potentially go via an exchange. So this is kind of like the way that all blockchains kind of like attract initial liquidity. So of course, like in the beginning, this will require kind of like people using bridge solutions, similar to how now like when people go to Canton, they kind of like are required to go via like either a bridge solution or via like an exchange.
Okay, got it. So the atomic swaps live between the Zenith solution and Canton, but not from mainnet, like ETH mainnet to Zenith.
That's right.
Got it. Okay, thank you. So let's talk a little bit about some of the technical stuff here. Maybe a bit of a technical deep dive. So here's some context. By extending Canton with a native EVM environment, Zenith allows developers to deploy these Solidity-based applications that are atomically composable across Canton subnets, with all activities settled on Canton mainnet. So we've got these Canton subnets and Canton mainnet. So here's the question. Zenith EVM, it runs natively on Canton, giving developers a familiar EVM environment and tooling. How does this native integration work? And what does it mean for developers who are building for institutions?
Right. So specifically, like how it works is basically we have developed this novel concept called external call. You can check more about it on the Canton forums. And basically what external call allows us to do is to transfer not just tokens, but also call data via our bridge. So this is basically what enables the atomic composability, is the fact that like when you initiate the transaction on Canton, the transaction then can flow directly into Zenith and interact with applications directly on the Zenith network. And you're exactly right. We settle all transactions on Canton. So in that sense, it's a little bit similar to how like an L2 ETH L2 works, right? They also settle transactions to ETH mainnet. I would say that like the biggest difference there is really, kind of like that we had this like atomic composability, between the two networks. And this was really done because like, I think, if we look at, generally, if you look at like kind of like scaling solutions on top of something, right, there, has kind of like been comments in the past that it takes away a bit of, the activity. Because for example, if you're like on an L2
Right.
and Ethereum, you have a withdrawal period depending on which L2 it is, often of days.
Right.
So, you can bridge using the bridges, but to actually, natively move assets between, you're very restricted in that ability. So that means that, like the liquidity kind of like can easily get stuck in one place or the other, right? So therefore this was like, of like utmost importance. So like when we started talking to Canton, back in the early days, this was basically like a requirement from their side. Hey, if this is to happen, we basically require you to be able to have this atomic composability. And it seemed like, an insanely difficult task at the time, and it still is. But we have now proven on testnets that we are able to do this. And basically, in something like what I believe you also asked what this means for developers, right?
Yes.
Yeah. So I mean, for like, I think like one of the things is that of course we also have to recognize that like when you build like a new ecosystem, like getting everyone to learn your new programming language, and with Canton is not just the programming language, it's also a completely new architecture compared to building on public networks. And Ethereum, of course, has had like development for over 10 years, so of course has a large head start. So really for us, it's kind of like, how do we take all of these amazing things that's been built on Ethereum in the last 10 years and put that in to be able to work with institutions in Canton, recognizing that we see like a need for like a thriving application ecosystem. And of course, we are still very supportive of Canton native applications, and we have had many conversations with Canton native applications and asset issuers as well, because they are like a very important part of this as well, right? Because typically, like the way that we often see it is that the applications are kind of like typically more the startups, and the asset issuers are more like the mature companies, right? There's some startups that also issue assets, of course, but on Canton we see it a little bit more on the mature companies. So it's also this idea like, okay, how can we basically create like a path towards having like a thriving application ecosystem, which we have on Ethereum, that are then able to provide benefit to the both applications and asset issuers on the Canton side. So that's basically kind of like a little bit like the thesis around that. So yeah, very, very exciting stuff.
Yeah, no, it definitely is. And so the next question that I want to get to here is, hearkening back to what we were talking about in interchain bridging. One of Zenith's major selling points is achieving consensus level atomicity instead of relying on hash time lock contracts for those cross-chain swaps. So how does unifying the Canton native asset transaction and the EVM smart contract execution into a single mechanism, how does that eliminate the risks of chain reorganizations and, as you mentioned earlier, so-called locked liquidity or getting stuck with your liquidity?
Yeah, so I have to make sure that I understand your question right, but basically, like, by the fact that we settle all transactions to Canton as well, we're basically able to port over kind of like the transactional data on a block by block basis, and therefore we are ensuring that kind of like Zenith and Canton are always in sync on that front. And I think this is like kind of like our main approach towards solving this problem. I'm not sure if that answered your question. If it didn't,
yeah, no, I think you're getting to the heart of it.
Okay, yeah. Feel free to like elaborate a bit more. I would also say, I work on the business side, so some of the technical things, I'm of course familiar with the concept, but if you really want to dive down, then I can't promise I'm your best person for the job.
I think you're doing a great job, Gustav, and I appreciate your effort here, man. So, really for me, it's I just want to start to understand a little bit more about how I can build on Zenith, and some of the things that I would need to look out for.
Right. Yeah. So I mean, I think like building on Zenith is, I think like one of the other benefits. Of course, we talked a lot about applications, but I think like another thing that like a lot of people underestimate when they start building on a new network, or just start building on Ethereum, right? That people take for granted there is the amount of infrastructure and open source libraries that are available. So I think like it's really about kind of like the easiness of building in Solidity. I mean, I'm from back, like the first time I started playing around with Ethereum, there was no tooling, right? Like I remember the first time I used Maker, I think it took 7 or 8 transactions just to open it was called a CDP back then, right? So of course, the amount of like infrastructure on the whole like developer stack is then available for you on the Zenith side. I would also just say that like I think most developers who's been in Web3 development over the last 6-7 years, just chances are they have tried building in either EVM or SVM, right? So I think like by us basically covering this, we're basically unlocking not just the applications already, but also the experience of most of all the developers that already has been building stuff in Web3. And I think this is another thing. And also like another point is, whenever you work, even with centralized counterparties, right? And this is also feedback we get from some institutions is that, they have been, building and playing around with EVM before. So, Zenith actually is like a great fit for them because they already have experience and team that has been building here. So like the way that I really like see this, is like, this is really like, just kind of like the best of both worlds, right? And I'd also say that like our Zenith stack is a RETH implementation, so it's a very standard EVM environment. So of course like in terms of like what happens with the transaction settling on Canton and stuff, that's all something that we take care of just automatically. It's just kind of like the nature of it, similar on an L2 on the EVM side. So in terms of like what you need to be aware about there, that's mostly it. I think we are working on basically getting like the proper workflows and transaction flows done for the Canton native teams, because of course if you're a Canton native team and you have a use case or you have clients that wants to go from Canton to Zenith, do a bunch of stuff on Zenith and then back on Canton, that of course requires like a workflow that doesn't exist now. So that's also something that we're working on and basically will help these teams with to be able to support that.
It sounds great. Yeah. So I've got a question from the community here. This is from Paulo. And Paulo's question is it true that the network already handles, I think he's referring here to Canton, is it true that the network already handles billions of dollars in institutional volume? And is that volume expected to grow even higher in the years to come? What is the outlook? And I just want to preface this real quick by saying, I read some report within the last couple of months coming out of JP Morgan Chase, one of their research desks, where they were talking about potentially migrating between 15 and 20% of their repo book onto digital rails. And I would assume that that means Canton, Connexus, maybe both of them, not quite sure. But yeah, so is it true that the Canton Network already handles all this volume and that there are big plans to scale in the years to come?
Yes.
Yeah.
Yeah. I mean, like, yeah, let me dive a little bit more into this. Yes, I mean, I think, like we're already seeing, billions of, especially like repo volume on Canton. Like when we talk about this volume, of course, it's a little bit different compared to, what we're used to on, let's say like a blockchain like Ethereum or Solana, right? Where we, like, I think like, some people, they're very used to like all the assets and everything living purely on chain. I think for now, it's kind of like, it's part of the systems and of the settlements that lives on chain. But of course, like the expectation is that over time, you're able to move more and more stuff like this on chain, right? And I think another good example of this is kind of like, we have the native treasuries that will be issued on Canton, right? So not a tokenized treasury, not, like
oh, wow. So I'm sorry for it. Is that an origination on chain?
Yeah.
Oh, wow. That's great. See, I was talking with Mike before you came on, Gustav, and I was just speculating that we might actually see like tokenized, not tokenized stocks, but like origination of equities on Canton first. I kind of thought that it might happen on Canton first. It looks like we're getting origination of treasuries on Canton first.
And it's from DTCC, so it's the Depository Trust and Clearing Corporation, which is one of the largest issuers of treasuries in general. So they're basically saying, okay, Canton fulfills what we need, and we're able to actually have them native on chain. And I completely agree with you. Like I've been working on this part of the stack for in my past roles as well, and the problem was always how do you satisfy the central security deposit, the CSDs, the central security depositories, right? Which is basically kind of like whenever a security exchanges hands, you have this like daily update on who the ownership falls to, right? So of course, for something to live purely on chain, you would be required to basically be able to update the ownership as part of the ownership on chain as well. So yeah, like this is super exciting stuff, and I think this is like another kind of like point that we have these institutional use cases that are already kind of like some of them in its infancy, some of them a bit more mature. But I would say like the biggest difference that I'm seeing now compared to the institutional work that I've done in the past is, for example, when I did SOSGen, right? We kind of like always knew that this was going to be like a pilot. We were in the innovation department. It was never going to scale really outside of this, but it was still a big win for us. But we knew that this was not necessarily going to be something that would be like widely adopted from the bank, right? However, I think like what we're seeing now on the Canton side is that it's not pilots anymore. It's not let's try something out. It's not getting stuck in an innovation department. It's very serious companies that, that are basically saying, okay, we are going to start on the smaller side, but the plan and the goal is to move as much of our business on chain as possible.
Absolutely. I mean, I can see so many possibilities in the not too distant future here where, I could use an EVM chain dApp natively on Zenith and interact with not tokenized equities or tokenized treasuries, but equities and treasuries originated on chain on Canton. So I'm looking forward to that day. That's going to be amazing. Imagine being able to borrow against Apple stock that's originated on Canton. And you can do that from an environment that you might be used to, maybe like Aave on Zenith, something along those lines. I'm looking forward to that, man. That sounds great. So I've got a couple of other questions here for you about ecosystem and governance. So here's some context. Zenith holds a tier 1 super validator position on Canton with the same governance weight as Visa, NASDAQ, and the DTCC. And that was earned progressively. My understanding is anyway that was earned progressively through demonstrated contributions. So beyond these validator operations, your team at Zenith holds active seats across Canton Foundation committees, which cover protocol standards, tokenomics, accountability, and ecosystem marketing. So what does the breadth of institutional involvement actually look like in practice?
On these, specifically in these working groups?
Yes.
Or committees, yeah. I mean, they're very active, for example, in the committees, you often you have representatives of, all the big super validators, basically. In some of them, most of them. And you also have a lot of, kind of like elected, you have some of the committees that are elected, right? So yeah, like there's a lot of involvement from them, and it's very clear that they take kind of like responsibility and are very serious about their participation in the network. So I think this is like another part, that to me feels quite different compared to what I've done in the past, right? I think, for example, like, in Ethereum, it's quite hands off. It's kind of like, everyone figure out kind of like what they're doing by themselves. And, of course, everyone collaborates, but it's very much kind of like on the application layer, where like here, it's very clear that kind of like the approach is to, have kind of like, strong involvement on the kind of like, chain level itself, and basically have these major players participating in the governance conversations directly. So overall, yeah, like I think it's like it's a different approach to what we've seen before, and so far it seems like it's working really well.
Yeah, it certainly does, and I can't wait. I think Zenith launches on mainnet in Q4, right?
Right. So it's like the timeline is like end of Q3 or like early Q4. We're going to go into, because of this external call function that we have developed, we need like a mainnet upgrade basically to support this. And this is kind of like our prerequisite for being able to go live. And right now, I believe it's to be scheduled around like end of Q3 or early Q4. And then we'll be launching shortly afterwards.
But testnet is live now, yes?
So right now we have our internal testnet has been live for a while. It's been running really well so far. We also have published some of the what do you say, benchmarks we have achieved there, and then we have a private testnet as well that is like I believe almost there. And then we're going to be launching a public testnet as well before we go live. But the public testnet is not quite out yet.
Cool. Awesome. I can't wait to use it. So, Canton processes massive volumes, but it seems like right now that capital is highly siloed in these permissioned bank-run subnets. So as head of ecosystem at Zenith, what is your strategy for breaking down these so-called cold start liquidity silos and getting institutions to deploy all that dormant capital into DeFi applications on Zenith?
Right. So I think, like we're talking with a lot of the institutions, and I think one of the things as well is that, there's just like a lot of really well done and well built use cases and protocols that actually, is very attractive for institutions. So it's very normal for us when we talk to the big institutions, both banks, telecom providers, conglomerates, really like a very broad variety of different institutions, that they specifically request certain use cases or even protocols, on the EVM side, saying, hey, we want to work with this team. So I think like, being able to provide kind of like these like very battle tested, secure, optimized for institutional players, protocols on Zenith, I think will really open like some of the doors, right? There's, like most of the primitives are still, quite early on the Canton side, right? I'm sure there'll come like a lot more out, down the road, and we're also really excited to see how this will progress. But on Ethereum, we just have like so many amazing things already built. So I think it's also like a little bit of this like chicken and egg problem, right? Is it like, are they siloed because they want to be, or is it just because they don't have necessarily like the use cases that they want to do quite yet? So yeah, like on the Zenith side, we're really, pushing for at least giving them all of this optionality. And so far the feedback has been, extremely positive when we're talking with them. So yeah, like really excited to see how this goes. My first focus is to get the DeFi teams on board, but of course, like from day one, we want to have, like use cases and capital allocation into everything already, because, like a DeFi, environment is only as valuable as the liquidity inside of it.
Very true. So what type of protocols do you expect to, see onboarded first? Is it going to be money markets, CDP protocols? Is it going to be decentralized exchanges, maybe a perp DEX? What do you see first?
All of them.
Yeah. Yeah. Oh, that's great.
Yeah. I mean, we basically have been, talking with all of like the tier 1 and tier 2 protocols. And of course, there is some that require specific infrastructure. For example, Aave famously requires Chainlink. So there's, like some things there where we're still working out some of the details. But like we will have, protocols covering all the main verticals that we see on the EVM side from day one. A lot of them we will have the biggest and most well-known teams. I'm not mentioning names yet, just because we are we are not really signing deals with them quite yet. We need to get kind of like our specific launch date fully aligned. Because it's EVM, it's very easy for them to deploy. But we are like in contact with most of like the big names, and the response there has also been incredibly good. As I kind of like mentioned earlier, it's kind of like been in all of the DeFi protocols roadmap to figure out how do we basically work with institutions, right? And then Canton has now come along as what will seemingly be like the clear winner on the institutional market, right? Where like I personally expect somewhere around like 80 to 90% of all institutional volume will exist on Canton in the Web3 space. That's kind of like my own hypothesis. We'll see, if I'm right or wrong. But either way, a lot of other people share that sentiment, right? And even if you're like a little bit more bearish and say, okay, maybe it's just 50% or something like this, then it still makes it that if your next growth vertical, which is most of these teams' next growth vertical, then it requires you to be where you can interact with them. It's not really feasible for like a long-standing DeFi protocol in Ethereum to rebuild everything from scratch on Canton, because there's been a couple of cases like this in the past, where you're not really able to guarantee the same levels of security that you are on your main applications. And this is like, this is the most important thing for any DeFi project, right? That is security. Yeah. So therefore, us kind of like coming into the picture for them basically means that, okay, like we want to work with Zenith. So most of them is just, figuring out, what that, will look like, and making sure that we have everything that they need. But yeah, this will be a big launch.
I have no doubt. And this, is a great segue into my next question here. So for context, JP Morgan Chase, the DTCC, Goldman Sachs, and Visa, amongst others, rely on Canton Network, the same network that Zenith builds on and, importantly, helps govern. So what does it mean for Zenith to share infrastructure with institutions of that scale? And how does Canton's architecture allow these institutions to eventually interact with DeFi applications?
Yeah, I mean, I think it's super exciting, right? Like, of course, I think it's something that, a lot of us, we have kind of like, theorized about happening at some point in the future. And, it feels like we are finally getting closer. So I think it's overall like very, very exciting to be in this position, and hopefully we can make some really cool use cases. But also say like another thing that I'm really excited for is kind of like, and I already had a couple of these conversations that kind of like dawned upon me that like I remember back when I started discovering really DeFi, right? When I first tried MakerDAO, as it was called back then. When I first tried Uniswap and Compound, that came a little bit down the road, and then Aave as well. You started having all of these kind of like ideas and things that like pop up in your head of like different things you could do with it, and it really kind of like became like very fun because of like the modularity of the technology and the composability of the technology, right? That basically just makes it feel like that the use cases are endless, right? And there's like a lot of very cool things you can do with it. And I've already had this happen in a couple of conversations where institutions are now starting to have the same moment where they're starting to think about things from their angle. And the thing that's really cool about this is that, of course, I come with my perspective, which is kind of like, always worked in tech, worked in, crypto and DeFi for the majority of my career. So, of course, I had like one perspective on what I figured was cool and what was possible. But, of course, someone, example, like I'm talking with a hedge fund manager who basically helps operate a dozen or so hedge funds in the European market up towards £1 billion pounds and euros. And he started thinking about this, right? And then started basically solving a lot of the problems that he sees in these hedge funds that he works with in their day-to-day operations. So this is also something that I'm like really excited about. It's kind of like seeing when a different perspective takes a look at the innovative nature of the technology and starts figuring out, what this actually means for their business. And then like in terms of like, what of course, Canton, how Canton enables this, I think those are the last part of your question, right? How Canton enables this for these players. I mean, Canton is super supportive of us and has really, helped us tremendously. And we of course have this, amazing super validator set up with them. And has been really collaborating very well with the team. So, I think that's basically kind of like on at least my side, there's maybe some other stuff that I'm not aware about. Of course, there's other stuff I'm not aware about. But at least on that side, can really see how they're also, very excited to kind of see how can we kind of like formulate these two things together.
So one of the things that comes to mind for me, first and foremost, is if you've got origination on Canton of treasuries and potentially also origination of equities, well, why couldn't you have an origination of a home loan, mortgages, or a car loan, and then if you've got origination of these these loan products on Canton, well, then you could use Zenith if you're a retail operator. You could use Zenith to borrow against your home, and you could do that natively on chain, and then take those stables that you borrowed, send them to your TradFi bank account if you want to. Like the efficiency that enables, oh my goodness, all the friction for every single one of those steps completely gets removed. So I can't wait to be able to do something like that.
Yeah, I mean, I think of course there's a lot of questions that needs to be answered, especially for RWAs, in terms of like transparency. How do we actually connect this to the real world? What does compliance and regulation and all of these things look like on this topic? But yeah, I mean, I think exactly use cases like this is something that I know a lot of people have dreamt about for a very long time, right? Because a lot of people already financing their mortgages and things like this using on-chain finance. But if you can of course bridge kind of the assets in a different way and actually start creating new types of digital assets, all of this becomes super interesting, right? And you could also imagine what it would look like if let's say bank risk and compliance requirements would be embedded natively on chain, and you can then start having kind of under collateralized lending directly from a bank on chain and things like this. So I think overall there's really a lot of very interesting possibilities. And yeah, I think of course people are starting with the big ticket sizes first, right? So now it was treasuries, and then probably next time it's going to be equities and bonds, and then things are going to flow from there.
It sounds great to me. I'm really looking forward to seeing the growth. And if we talk RWAs and scaling, just real quick. So with a Zenith EVM on Canton mainnet targeted for, I guess, the end of Q3, beginning of Q4, and later followed by a Solana virtual machine execution environment, how does this multi-VM future scale the Zenith ecosystem? And what kind of new developer opportunities are you hoping to onboard?
Right. So, I mean, we basically, I mean, EVM and SVM, and then we're also going to start eventually having these private deployments. So we already had requests from institutions now that basically want to have their own Zenith chain, right? So this also means that, if you want to have more controls, or if you have use cases that requires something different, but you still want to have, EVM or SVM, we're also going to be able to support that. So Zenith is really it's not just a single EVM chain. It's really the technology that enables us to power any environment living on top of Canton in the future. So of course we're also very committed to Canton, and and all of these environments will all settle all of their transactions to Canton, right? So over time there will really be kind of a lot more opportunities for building whatever specific use case that you want. On top of that, we will have kind of the same native composability and atomic composability between, not just Canton, but also the different Zenith chains. So the goal is also to have, like this, like, freedom of asset movement between the different Zenith chains, and also to Canton as well. So, you could imagine, that like you have, let's say like a business that lives on Canton, but has a private environment on a Zenith stack where they take care of, like, let's say, like certain part of their customer aspects, and then they use that to then interact with a DeFi protocol on Solana, and then they, deposit into a yield protocol on Ethereum. Like, all of this would be possible. So it's also about, like, unlocking this kind of like, real interoperability between kind of like all the elements that will be living in the Canton ecosystem.
Wow, that's real composability right there. That sounds so exciting. Let me ask you this. As I was performing a little bit more research in preparation for the interview with you today, Gustav, I came across a little bit of information about the Zenith testnet, chain ID, RPC, URL, stuff like this. And then it told me that the currency symbol is ZEN. Is there going to be a token for Zenith or no?
Yes, there will be a token for Zenith, yeah.
Wow, great. And, me as a retail investor, how could I, gain some exposure to that token? When is it going to launch? Stuff like this.
Yeah, so we will launch the token post mainnet. I don't have all the details. Of course, like the token is going to be, exactly right, like the gas token, and there's other things, but this specific topic is just something I'm not really working that much with personally.
Gotcha.
So I will have to owe you an answer when we come closer to the launch date, and I can update myself a little bit better. But yes, there will be a token.
Awesome. Great. Well, us degens out here in EVM world, we would love to be able to lever that up 100x when it launches. So,
yeah, that will be very fun, right?
Yeah, I'm sure.
Just kidding, of course. Like, please, no one ever lever anything over 100x.
No, just kidding. Right. Or am I? I don't know. But Gustav, thank you, man. This has been extremely interesting learning about Zenith. And, I really can't wait to be able to launch a dApp on a Zenith subnet, an EVM subnet. So looking forward to that. And I also can't wait for the mainnet launch of Zenith. So thank you, man. I appreciate your time. Thank you for coming on. And Mike, I'm going to hand it back to you.
I appreciate it. Yeah, no, Gustav, it's been great having you. And I would love to stay in contact, and as you guys get closer to mainnet launch, maybe have you back on, and maybe we can talk a little bit more about the token, and just kind of the what's transpired since this interview, and just get people up to speed, because we're very personally, and our channel and our community is very, very bullish on Canton. Just since its launch, with the way that they conducted their token generation event, the tokenomics, the way that there is, that value capture that, we're always talking about here. So, we would definitely like to keep our finger on the pulse of what's going on there at Zenith.
No, yeah, I'm very happy to come back. And yeah, of course, like at the time, of course, I'm happy to talk about anything that I can talk about. Thank you so much for having me, and let's stay in touch, and looking forward to coming back here chatting one day, also because that means that we're going to be very close to mainnet at that time, which is of course something I'm super excited about. And I appreciate your time.
Awesome.
Maybe I'll see if I can get Shaw to come on again with you, closer to launch, from Shaw, one of the co-founders at Canton.
Yep.
Because he's been on our show a couple of times now, and
Nice.
I would love to have him on and you at the same time, so that you can give all the different perspectives and angles.
That'd be fun.
Yep.
That'd be a great time.
All right, well, we appreciate it, Gustav, and we'll talk to you soon.
All right, awesome. Thank you very much.
Peace.
Ciao.
That was great.
That was a lot of fun, man. That was awesome. Yeah, I can't wait to be able to use these Zenith subnets natively on Canton. Dude, it just sounds like an amazing opportunity. I can, all of those different use cases that, he appropriately said I've been dreaming of, that have been dreamt of, where you can have origination of a loan on Canton, and then you can use an EVM chain DApp on Zenith to borrow against, that product. I mean, that type of stuff for me, the efficiency that's unlocked through something like that, just so powerful for retail.
Well, I think the most powerful thing for Zenith is that it's bringing a gateway or a bridge to onboard retail into some of the this strictly institutional liquidity and opportunities that are on Canton. So because I think that's something that's that's lacking as of right now. I mean, there is some DeFi that's being built out on Canton. We've pointed that out on past episodes. But I think what the important thing that we pointed out during that is the lack of liquidity on some of those platforms. So I think that onboarding some of this liquidity from Ethereum mainnet and Solana and Rust and all these other things that you two discussed, I think it's going to go a long way with without having to bridge, giving that seamless liquidity for the DeFi across, and onto the Canton Network.
Yeah, so we were talking a little bit about silos and those cross-chain atomic swaps between the Zenith subnet and the Canton mainnet. It sounds to me like that really unlocks those silos where, if you are an institution, let's say that you're JP Morgan Chase, right? And you want to, execute some type of transaction with another institution, let's say it's Goldman Sachs, whatever. And you've got subnets on, you've got these, Zenith subnets on Canton. It sounds to me like, all of a sudden the silos get broken down. And yeah, man, you talk about unlocking liquidity. That's what that sounds like to me. So I really can't wait to start using this natively. And I got to build a bag of CC. That's for sure. no doubt about it.
Yeah, no, I'm glad I got into Canton at a very good price point. I think my average entry is like 10 cents or something like that. So I'm very grateful for that. And I kick myself, when it dipped down to like 7 or 8 cents for not picking up some more. But anytime I see a dip, out of that range, that it's where it's been ranging for so long, I always, find myself wanting to pick up at least another couple $100, just kind of, keep adding to that bag.
Yeah, man. I mean, for me, I'm just thinking that with just the beginning of the institutional adoption of the Canton mainnet, that once Zenith goes to mainnet, it sounded to me like there was a requirement for like some type of chain upgrade in order to enable Zenith subnets. And these subnets sound almost like layer 2 chains, kind of, sort of, is what they sound like to me, except that they're not extractive, like I think a lot of the layer 2 chains can sometimes be.
Yeah, like basic with
yeah, I think that some of the EVM chain layer 2s can kind of be like not value accretive necessarily. I think they can almost like, yeah, they can like almost extract value from the mainnet, but it doesn't sound like that's what these Zenith subnets do at all. In fact, it sounds like they, accrete more value to the Canton mainnet because it unlocks so many different opportunities for institutions that are already on Canton. So, and did you hear what he said about 90% of institutional DeFi living on Canton in the not too distant future?
That would
dude,
be if if
yeah.
it happened. It's an if still, but that would be huge if that happened. I mean, hell, even 50%.
What do you mean, Mike? They're all going to XRP, bro.
I know. Yeah, it's just don't get me started.
I know, right?
The amount of time that and it's beneficial because a lot of the discussions I have with people on X and stuff, I'm not necessarily only talking to them. It's a record of information that other people see, and it makes them ask questions, and if they're intelligent, it makes them do additional research and potentially save them from being, exit liquidity for the, some of these, some of these companies that are using retail to, again, bootstrap liquidity for, their projects.
And Mike, did you see that he confirmed that yes, there will be a token launch?
Yep.
So Zenith will have I think it's ZEN, so the Zen token. So you got to get your bags ready. You got to get your shopping list ready for CC and ZEN.
It has a name that isn't extractive, like black hole and all that you talk about.
Oh my God, I know, it's a great name.
Yeah,
it's a great name, man. I love the token ticker for sure. Another thing that stuck out to me was the origination. So that's something that we're always talking about. We talk about tokenize this and tokenize that. Those are derivatives, but the origination, if it takes place on chain, all of a sudden you're talking about the real McCoy. You're not talking about a derivative that's backed by something else. That's a big deal.
And that goes back to that Coinbase article that we covered, because if that is the case of, what you're talking about with, Zenith and Canton, is potentially, if you buy the tokenized, version, then you can earn derivatives. You can, directly earn the derivatives and have,
So no. What you're referring to is the dividend.
Yeah.
So you said derivatives. So
sorry.
Yeah.
Yeah, no, sorry. Thank you for correcting me. The dividend, but it gives you all the legal, benefits of actually owning the stock, but in a digital form, to where again, you can do a lot of additional DeFi with it because it's tokenized. You borrow against it, all these different things. So very, very powerful. I see this being, if it all comes to pass and it is executed properly, and I see this as being huge, for traditional finance, for decentralized finance, for Canton, for Zenith, for retail, all of it.
As you were speaking, Mike, I was just thinking about the Clarity Act a little bit, because it looks like equities will be not tokenized. That's not the right word for this on Canton. That equities will be originated on Canton. And so that origination means we're no longer talking about a tokenized derivative. We're talking about the real thing.
Yeah.
So the real McCoy. So if we're talking about origination of equities on Canton, well, then it sounds to me, and I'm just speculating here a little bit, that we've got to start to distinguish between like public chains and Canton. Okay, so public chains being, EVM chains, Solana, Sui, et cetera, et cetera. But, Canton, if you've got real on-chain origination of U.S. treasuries, of equities, and, if you've got that, are we going to see almost like a vampire attack where the public-facing chains lose TVL and volume to Canton because, maybe there's more TVL on Canton, there's more liquidity on Canton. You can interact with those dApps on Canton using Zenith and go back and forth between your bank and those dApps seamlessly because the origination all took place on Canton on the mainnet. Yeah, man, maybe the Clarity Act ends up being a boon for Canton and Zenith, but it could end up being maybe a net negative for public-facing chains. I don't know.
Well, I mean, this will be kind of my closing thoughts before we do social. But my thought process is, and always has been, is I tend to zoom out. So looking at each of these projects, kind of independently, is great. To understand the nuances and the finer details, but when I talk about zooming out, is I'm looking at what is being built on the macro. What chains, what protocols, what companies are actively being utilized to build out this, hybrid TradFi, DeFi, rails. And I'm not talking about, that they have, signed an MOU, or, they're in talks with, or I'm talking about actively launching real products that generate, volume and fees and revenue, and, like, that are actually doing things. And I see, projects like Canton, I see projects, potentially like, Zenith, Ethereum is definitely currently a big part of all of this. Um, Morpho is, in base network. I'm seeing, it just keeps growing as far as, its part in that future financial system. Love them or hate them, Coinbase. I mean, they're a lot of, the custodian for a lot of these ETFs. These institutional ETFs.
I think they're the custodian for like 99% of the ETF products.
Yeah.
Yeah.
So love them or hate them. It's like you have to accept things as they are as an investor and not allow your emotions. It's like, yeah, I mean, I want all of this to be decentralized. I want the government out of my business and out of my wallet. But, it's, we have to be realistic. And if you want to take full advantage and, and profit and benefit from what's being built out, sometimes you need to put, your personal feelings aside, make some money, and then, you're in a better position to, decentralize yourself, or become more sovereign.
No, dude, no.
That's what I'm doing.
Hey, Bitcoin fixes this, man. Bitcoin.
And you can sit in Bitcoin, and a lot of things can happen with Bitcoin. We've talked about it. If there isn't any DeFi built out on it, if it's not used, if it doesn't, if it gets to a point to where it's not profitable to mine it, and people stop, mining it, and the network becomes less secure.
Yeah.
There's a lot of things that can happen with Bitcoin even. So we have to, take a very stoic, very unemotional approach, with our investing. And part of that is, using, tools. And for us, we offer no cost tools. A lot of places out there, they want to charge you, to educate you. And so I'm going to show you our official website, thenode.pro. This is a one-stop shop. And, you can say, say that we're, kind of, shilling our products, but we're not charging you for them. So, we're not shilling anything. So if you want to actually learn about, a lot of these things that we talk about here on the channel, value capture, if you're curious about DeFi and how it works, or crypto, or anything like that, right here, right on the homepage, start free now. Click that. You can sign, make yourself an account so you can keep track of your progress. But basically where it brings you to is here. And this is DeFi University. This is a structured educational system that will take you from beginner, what we call DeFi high school, introduction to DeFi, crypto first steps, money basics, crypto fundamentals, and slowly build, each module builds on the last. So you're building a foundation of knowledge so that you can navigate, these DeFi markets and learn how to, benefit, from this, evolving technology. Another thing that we offer at no charge is our deep dives. So this is our library that we just started building out, but you can see that it is, we have quite a bit in here already on a lot of these projects that I'm talking about on our social media. So Hyperliquid, great product, a great platform, and generating massive fees and revenue that is being used to buy back and burn the hype token. That gives value capture to actually holding the token because it's deflationary, and we've seen that in the price. So that's something that we focus on here. Canton, we're very bullish on. Tron, bullish on. Stellar, not so bullish on. Due to the tokenomics. After looking into this deep dive, Ondo, same thing. It's basically a governance token. It has zero value capture. Venice, interesting. I've been interested to see how its price is pumped, but and I like the privacy aspect of it. I just wasn't that impressed, honestly, with the AI itself. It just seemed like it was a wrapped version of other AIs. So I'll be interested to see how that evolves. But all of this, you can go into these and you can watch the videos. You can watch the videos. You can read through the documentation. There's slide decks if if you want to go through and just kind of get an overview of the tokenomics, what it is they're building, who they're building it with, and then you have the kind of the one shot where it just gives you kind of the overall snapshot of what's going on with the project. We have this on every single one of these projects that are in the Intel library. So feel free to dive into there, check that out. If there's anything that you'd like to see, reach out to us in our Discord. Again, no cost Discord. Jump in there, talk to me, talk to David, talk to Jeff, anybody in our community. If you want to see us, have us cover a project that you're bullish on, talk to us in there. If it looks interesting, I'll do a deep dive on it, and kick that over to David to do live. Our AI newsletter. This is, you can try it out at no cost, but it will be $20 a month if you want to have full access to that with all of the functionality. And it is a great product that David's been fine tuning. The cool thing about this is you get to select what it is, the assets, if it's crypto, if it's stocks, if it's commodities, you select the assets you are interested in. And the newsletter will generate all of the, go and find all of the news and data for your assets. So you don't have to spend hours a day online poring over, the interwebs looking for information on your portfolio. Great tool. Again, our community, join the Discord. You can also join the premium live calls on Mondays, Wednesdays, and Fridays with David in the community, where he usually has a short lesson, and it's an open forum video call where anybody in the community can point out opportunities that they're finding as far as yield, earning yield, things that they've been successful with, and things that they tried and maybe failed at. So it's a great place to find mentorship as well. I love that aspect of it. We do have a swag store. So if you want to come in here and want to help support the channel, you can buy hoodies, you can buy hats, you can buy T-shirts, all of that here, branded with all of our different different shows and programming. If you want to know what's on, so like today, David later on today has the daily market wrap, and tonight me and Jeff will be doing crypto and chill. You can see all of the different channels on our network. Coaching. So David offers a very in-depth one-on-one coaching. It is a paid service, but you can come down here and schedule a time, no cost, no obligation call with David, where he'll go over your current portfolio, your risk profile, where you're at in your knowledge and journey, and if you're ready, then basically he'll take you on as a client and teach you over weeks, how to improve your investing. Now, he might, because he wants you to get the most from it, he might kick you over to our no-cost DeFi University and give you some homework to do to get you up to speed before you sign up for that, so that he ensures that you get the most from your one-on-one time with him. So very important. And then the API. So a lot of the offerings that we have, it is driven by APIs and data that that David has found around the internet, and so he packaged that. So if you're a developer and looking to build out dApps and things like that, and looking for data streams for those dApps, this is something that that he is offering for sale, and that you can use. So a ton of valuable content here, both non-paid and paid. But first and foremost, if you find anything that we offer here valuable, and you want to show other people where to find us, the most powerful thing that you can do to help us is just simply, it costs you nothing. Go down to the bottom, hit the like, subscribe to the channel, and share the stream. David, is there anything that you'd like to add before we close this
No,
out?
sir. I'm good to rock and roll, man, and get back to work here.
Awesome. I'm going to get back at it as well. Thank you all for joining us for this interview, and we hope to see you back here again soon and later on today with the market wrap and crypto and chill. And until then, Veteran Crypto out.
Peace.